Well, good morning, everyone. This particular breakout session is for federal crop insurance and options with insurance for production of hemp. With hemp being so new and it being had prior being a controlled substance, now it's moving into production. The potential now and into the future, and information I saw yesterday about how the value, based on the acreage and the value of this crop, you're looking at one of the top 5 value crops being produced in the United States. So it is important. It's becoming more important. Is sort of financially for producers and the rural sector. So crop insurance is a tool that can help manage your risk. My name is Ben Thiel. I'm the regional director for the Spokane Regional Office. My particular area that I serve is Alaska, Idaho, Oregon, and Washington. And I'll kind of cover some various things, but since hemp is so new and depending on the sophistication of this audience and sort of your awareness of how crop insurance works, I thought I might be more, and due to limitations of time, kind of provide more of a overview of what crop insurance is per se, and then further discussion about what options then are available with crop insurance. So, brief overview about general risk in farming, then the role of crop insurance to deal with those risks, the structure and design of crop insurance, briefly touch on the hemp APH policy, and I apologize for that, I'm doing you a disservice. Unfortunately, that policy hasn't been released yet. It could be very soon, matter of days or weeks, but since it's not publicly available, I can't get into too much specificity. There's another policy called Whole Farm Revenue Protection Insurance, or WFRP for short. That's another option that is available for hemp. Either one of these policies, though, are going to have some limitations on eligibility, which hopefully when I cover some other information, there'll be some more understanding about why there's limitations. So in general about risk in agriculture, for those of you in the audience that are growers, whether it's other commodities or hemp, you're exposed to these certain risks: weather, yields, prices, government policies, global markets, and other factors. In farming, there's maybe kind of 5 risk management concepts that you might have to deal with for farming and having a business of farming, and where crop insurance can help serve the role to help you with some of these, but not all of these. So crop insurance can help with production risk, and to a certain extent, there are certain products that crop insurance has that can help with price and market risk, and maybe to a certain extent financial risk, because crop insurance, I would say the transition or evolution over time when financing is lenders are requiring for collateral purposes and operating credit that you have crop insurance. That can vary by crop and geographical region. In Midwest, I think this is a major driver of financing, and it's just sort of a normal thing in businesses. If you're in farming, you have crop insurance, and the bank wants to know that you have it. Then there's other forms, last two forms of those 5 that crop insurance probably doesn't touch and help you, and depending on, there are ways you can mitigate risk in your farming operation. You're subject to the climate, and maybe there's certain areas that climatically don't have a lot of adverse weather, so maybe you feel like you don't have a lot of risk, or maybe you're managing your production practices help you manage risk in certain ways, where you have a greenhouse or you're irrigated. Those are other things, but institutional risk and human and personal risk, crop insurance does not do that. Crop insurance covers natural causes of loss. We don't cover a storage structure that collapses and ruins the commodity. If the power goes out, we don't cover that. If the storage structure catches on fire, we don't cover that. We don't cover business interruption insurance. We don't cover any man-made causes of loss to your operation, say the failure of a buyer to buy your production. And these kind of things will also get touched on as I go through this. So what do we cover with crop insurance? Only natural causes, so insured causes of loss that we do cover. Adverse weather conditions is a broad term. Basically, hail, drought, freeze, too hot, too cold, too wet, too dry. Fire for natural causes, insect and plant disease, as long as there are proper, basically you're doing a good farming practice and growing that crop, you're applying the necessary inputs, but despite your best efforts, you're unable to control insects or diseases, then crop insurance covers that. Covers wildlife, earthquake, volcanic eruption, which for a lot of the country that's not too applicable, but there is applicability out here. There has been some experience certainly with that. And failure of irrigation water supply, and then certain policies that we have would cover price changes. So why federal crop insurance? Well, it's going to help farmers recover after severe weather or low production. Crop insurance, you have to pay for it when you buy it, and it is subsidized. But since the government is subsidizing it, it makes it more affordable then for you. So it's not cheap or free, but it potentially is affordable, certainly more affordable than what it would be available solely in the private sector. There is no form of multi-peril crop insurance that exists in the private sector alone. The reason being is because there's so many crops exposed to so many weather variables out there. The private sector long ago they've never got into that business because they viewed it as too risky, and if they were to provide insurance, likely it wouldn't be purchased because it would be unaffordable. The government makes it affordable with that subsidy. Again, it improves access to credit by having crop insurance, and overall, it's a part of the overall safety net for agriculture. In a way, it helps avoid disaster assistance, although Congress has done things to provide disaster assistance. Crop insurance is sort of there in place because you're buying into it. And I would say crop insurance, it's not going to make you rich, but it is going to make it so it'll make the difference of staying in business, being able to pay your debts that you have, and operate from year to year after a disaster. So the delivery system with crop insurance is pretty unique in that it's a public-private partnership. And I'm sharing time with a crop insurance agent that'll be speaking after me, and he'll cover some things about sort of his role in crop insurance and then maybe some additional options that he provides that are solely in the private sector, that maybe are a little more narrow in scope, but there's some other options beyond what I'm covering today right now. But my agency with RMA and the government's role in it is we design and develop the policy and procedure for crop insurance. We ensure the integrity and compliance of crop insurance. We educate producers like what I'm doing here today. We also reinsure private insurance companies, and then we subsidize the program. Then on the private sector, they're doing the actual face-to-face delivery of the system. When you buy crop insurance, you don't come to me or my agency, you come to an agent that's out in the private sector that specializes in doing crop insurance. You're not going to a state farm agent, you're going to somebody that's licensed to sell federal crop insurance. And the unique thing about crop insurance is there's no competition in price. As long as you have the same insurance parameters, between two different agents, the price should be the same. The competition's in service for crop insurance agents. And then when you visit an agent, you discuss options of insurance, and you get insurance, it's being underwritten by a company that does federal crop insurance. We call it approved insurance providers. There's roughly a dozen or so of those. And they underwrite the policy. They also, following our policy and procedure, if you have a loss, you notify your agent, the agent notifies the company, they send out a loss adjuster, and then they would determine the amount of loss and pay the indemnity. And then they report all that information back to us. What's also key with crop insurance is it has to be actuarially sound. That means it is very much data-driven. And hemp, unfortunately, since it was a controlled substance in the past, there is limited data available about the production as far as yields, valuations and prices, and what loss frequencies there are for hemp. Crop insurance has a continuous rating methodology, meaning that what we charge producers in the form of premium and the rates that determine that premium comes from the history of producing that crop in a region. And a producer uses their own production history to help determine the guarantee they have for crop insurance. And without that data, it's really hard to determine, to set rates and prices and what the risk is. And crop insurance is statutorily mandated to be actuarially sound, meaning the loss ratio is 1. We take them in an equal amount of premium to what we pay out in indemnities. That doesn't mean we're trying to make money off it. It's just we have to be, to some extent, debt neutral and be accountable to taxpayers. But that's not by one crop or one specific area. That's for our entire program. So what products do we have for crop insurance? We have production policies, we have revenue policies, and we have area policies. So for hemp, you're going to have what's going to fall in the production side of it, what we call actual production history, APH. That's using your production records. Usually that's a minimum of 4 years up to 10. When you have less than 4 years, you're using something else to supplement that, meaning usually it's what we call a Thiel, the county average, or a percentage of that county average. Then there's revenue protection, which I'll touch on that when I cover whole farm revenue protection. Area plans, that's not going to touch hemp. To make another note for another agency, Farm Service Agency does have a program called NAP, is the acronym, Non-Insured Crop Disaster Assistance Program. It is, although I guess they don't quite call it crop insurance, it is a program that's kind of in ways that work similar to our program, where when we don't offer insurance, that's an alternative to turn to, and you would actually go to a county office with FSA to work with that. So that's another option to explore for your risk management needs, is talking to FSA. So with crop insurance, there's an insurance cycle in that delivery system, 4 phases. The first phase is engaging the agent to discuss your options to consider crop insurance, or actually filling out the application and initiating crop insurance. After that point, then you're going to phase 2, where coverage is being initiated, and then which is planning the crop, reporting that acreage to your agent or to FSA, and then basically everything that has been being determined as far as the cost based on sort of your production history, which determines your guarantee times the price, and then you also set a coverage level, which is sort of forms of a deductible. And then within phase 2 and in phase 3, once you plant the crop and you have any forms of loss, again, you notify an agent, and that agent would report to the company, and a loss adjuster would come out, determine what production is remaining against what guarantee you have, and then any shortage becomes an indemnity check. The last phase is just sort of more of a contract. Crop insurance is a contract. And within a contract, we have a contract change date where we set a date that we can't change in the rules after that certain point. And after that, then it's the open sales period up to the phase 1 sales closing date. And these are general dates. There can be variability depending on area and crop, but with hemp hemp being a spring planted crop, the sales closing date is likely going to be March 15th. Acreage reporting date is probably likely going to be July 15th. For other forms of crop insurance, you have fall crops and perennial crops with those subsequent dates. Again, unfortunately, the hemp policy hasn't been released, so I can't say specifically what it does or doesn't cover, but based on my knowledge of other policies and kind of all the things I've said before this and how crop insurance is data-driven, we have to be actuarially sound. This particular policy and our initiation of providing crop insurance for hemp, this policy is privately developed by a company called AgriLogic. I don't happen to have their contact information on me, but it's something you could Google and probably find the contact information. There may be even people in attendance to this meeting or even in this room that might have actually engaged with this company to provide information, provide data to help them design this particular insurance product. But it was one of the fastest developments ever for an insurance product. And also what's unique with crop insurance is we don't always design and develop ourselves internally. We also rely on the private sector through their own innovation to come up with insurance products that we adopt into our portfolio. In all likelihood, again, this is subject to what comes out when it's finally released. I'll have a screenshot of our website that'll have that information once it's released, that you could find that information, but likely eligibility requirements because of data limitations could potentially be restricted to that you have to have a production contract to be insurable. You have to have produced the crop. Maybe you might have to have produced the crop in the past. It's likely not going to cover hemp going hot as an insured cause of loss. It's not going to cover, or any form of crop insurance does not cover the loss of the buyer. That you maybe had a contract, but then the buyer becomes insolvent, or the buyer wasn't legitimate anyway, or the buyer's not willing to then take your production because it lacked the amount of CBD. This policy is going to likely cover 3 forms of hemp production, being flour, the CBD, and grain, and fiber. Now transitioning to the other policy I mentioned, there's kind of 2 options with hemp. The other is whole farm revenue protection. It is kind of a rather complicated policy. It does work for certain operations. At this point, I don't know how well it'll work for hemp. Tree fruit, this is their go-to. This is their primary risk management tool. Other policies like, say, corn or soybeans or wheat, not so much. They might adopt this but still maintain an individual policy. But overall, this policy covers up to $8.5 million of your farming operation revenue. It doesn't mean it's a profit and loss protection. It's covering just revenue. It can cover specialty and organic crops. And what it does is it insures all the commodities on your farming operation, not just individual commodities. So if you're doing multiple crops and you incorporate hemp in, then hemp becomes a part of this. It has some it's available everywhere, but it excludes just a few things, but you can insure, again, you're insuring everything on your farm. What does a revenue component mean? What's unique about this, instead of your production records, it's insuring your Schedule F IRS tax form records. So it's, in my opinion, it's more your true revenue is reflected in there. It's covering decline in price, as well as covering quantity and quality deficiencies. It has replant coverage, although it's not available for hemp. And it covers issues if you're unable to plant the crop. And I'm finally kind of bringing up this slide because I mentioned there's a subsidy and there's a coverage level that you select and then a deductible that's in there. So you self-select that deductible. And for example, 75%, your deductible is 25%. You have to have 25% loss of revenue before this starts paying. The subsidy with only one commodity, because you're more risky if you have one commodity. If you have more commodities, you're less risky because you're diversified. You haven't put all your risk in one commodity, and plus there can be offsets on one commodity could do really well, one could do poorly. But when you're 2 commodities, the government is subsidizing at 80%. That APH plan of insurance I mentioned likely is following that one commodity count subsidy structure. So that's one of the selling points for whole farm, is just the level of premium subsidy the government provides where the producer is paying 20%. Sort of black box in the background, also we view more commodities you produce in your farming operation to be less risky, so there's also a further diversification discount that impacts the premium as well. I also mentioned that you can combine this policy. You can have a standalone policy. You can have whole farm together. But here's the kicker with hemp. How do you qualify? Have to be a U.S. citizen. That's not probably a limitation. Be eligible to receive federal benefits. File a Schedule F tax form covering 100% of the farming operation, but you have to have 5 consecutive years of farming, and probably a lot of hemp producers may not have been farming, or traditional farmers where they're deriving revenue that they're filing taxes on. So that may or may not be, I suspect that is a limitation for a lot of people in this industry at this point. Although you could have been farming other commodities and you would qualify because you're then just incorporating a new commodity in, and you have to be engaged in farming and derive revenue from those commodities. There is an opportunity for new and beginning farmers, but we still require certain years. We've shortened it up some. So in this example, you qualify as what's considered to be a new and beginning farmer. You've never farmed a ranch before, but to qualify for this policy, you have to have farmed basically to get a policy 2020, you had to have been farming in 19 and file taxes 16, 17, and 18. So we've cut off 2 years off of that, but so you can't just right out of the gate jump in and get this policy with hemp only. If you were to qualify with this, you'd also get another additional 10% premium subsidy. What information do you have to provide to that agent when you have that conversation with that agent? You're bringing in your Schedule F tax records for the past 5 years. You're bringing in also information of what you intend to do the next year. You're also bringing in supplementary information about inventory information, accounts receivable, accounts payable. Ultimately, how does the policy work? We look at the history. We also look at what you intend to do. And for underwriting purposes, we insure the lower of those two. The next few slides will sort of show an example of that, where this is the history review. So in this particular example, we're looking at history of 2012 to 2016. I apologize, yeah, it's not up to date with 2020, but it's just for example purposes of showing the 5 years and then the 5-year average history. There's a second component where we look at fluctuation in history that it may trigger there may be a trigger there where you might actually get a bump up, where we see there's fluctuation, you're due for an increased year above your average. We also look at expanding operation, that from your average you intend to farm more the upcoming year because you've added more to your farming operation, being more acreage, so there's a factor. On all 3 of those steps, we look at the higher of and the history. Then we compare to what you do. Again, I apologize, it's not hemp in here. I'm just sort of recycling in another presentation. But in this particular, you could envision one of these lines being replaced by hemp. So you've got 4 commodities in that operation, and this is what you're importing to the agent of what you intend to do in that current year. So you've got your onions, your wheat, your alfalfa. You're telling them the acreage, the values of each, which is going to be based on various things as a requirement of the policy, what those are supposed to be based on. But ultimately, this producer in this example had $1.4 million of what they expect to do. You compare that to the history in that previous slide of 1.6 compared to what they intend to do. So what we're insuring for revenue-wise is what you intend to do for that year, because we're doing the lower of. We can't just insure solely on the history, because if we did that, you're telling us you're going to have lower revenue. That would be a built-in loss right there. So 1.4 million, you pick your coverage level, 85%. Your insured revenue is $1.2 million. That farming operation now is protected at that $1.2 million for insured causes of loss. End of the year, the producer, when they file their taxes, though, and they report their revenue, it's $1 million, but the information from the year, for the example purposes, they might have had some losses on yields, or the prices might have gone down from what they thought they were going to get, so ultimately they had $1 million of revenue they reported to the IRS. That gets compared back to what their insured revenue is, and then their deficiency is $185,000. And below, because this was such high coverage level, the subsidy wasn't as great, being 56%. But this particular calculation, again, this is not taking in hemp into account, but this policy for that amount of coverage was $34,000, but since the government subsidized it, it was $15,000 for them. Again, this is our homepage for RMA, Risk Management Agency. So for anybody here, out of everything I've said, hopefully this is one of the most important things, is you look at our website, go through that information. That's kind of what the homepage looks like, although this is an older screenshot, but there are tabs in there where you can translate to Spanish. There's tool. You can click that tool tabs and find agent locator, summary of business, what's called the actuarial information browser that determines where you can find what crops are insurable where, or specifically look at hemp, because the hemp APH policy, it's going to be available in Oregon, not all counties. It's not going to be available in Washington for 2020. Likely, though, in future years it'll expand on its availability as more data becomes available. And you as the producer or any stakeholder, the more data you provide to AgriLogic or to RMA, the better or the more enhanced we can make the program out into the future. Again, thank you. There's my information. And at this point, I'll turn it over to George. And then there'll be time after George for questions.
Yeah. Thank you, Ben. My name is George Harris. I work with Northwest Farm Credit Services Insurance Agency, and all I do is specialize in crop insurance. And as Ben mentioned, how you locate an agent, the RMA does not favor any agent over another agent. They provide that list to you, and so they're not necessarily recommending any other agents. But I do want to ask, is there any well, Carol's here, Carol Bolton, she's from MAPS Insurance Agency. Is there any other crop insurance agents in the room? Would you like to introduce yourself?
Sure. Hi, I'm Heather Cook. I'm with King West Insurance based out of Portland, but we're a regional insurance brokerage, so we're in Washington, Oregon, Idaho, and Montana.
Thank you. And so these are the people that have gone through specific training. We're required to have up to 12 hours of training each year in crop insurance and have to pass a specific test to be licensed to be able to sell crop insurance and the federal crop insurance programs. The WFRP program, from an agent's perspective, this right now is one that's in writing that we can actually sell. The requirements on, I'm going to repeat a little bit of what Ben mentioned, is that probably the biggest tripping point is going to be having that contract in place. The sales closing date on WFRP is March 15th, so that's coming up really close. And you actually have to have that contract in place by the time that sales closing date comes up. The other thing is to understand that if you do grow that crop, it's going to be very important that you try to maintain that THC level below that 3.0 threshold, because if you go above that THC level on that, it'll make that crop uninsurable. But if it is sold, which I understand in Oregon, potentially you could still sell that crop as long as it doesn't go above 1.0, which I learned yesterday, that you could potentially sell that through the recreational stores. And any sale of that crop will still be counted as revenue to count in settlement of a WFRP claim. And the other thing is that if it's sold across states and it is a hot crop, potentially if you're found guilty on that, you could be kicked out of the crop insurance program for selling an uncontrolled substance. So those have been some of the tripping points that we've seen. So be aware of those. Also, when you are looking for an agent and you come across an agent, some of the things that you want to ask your agent are, what specifically am I going to be covered for? As Ben mentioned, you saw the lists of perils that are covered on this. We're not covering for any man-made causes of loss with crop insurance. So if your neighbor sprays something and it comes in and hits your crop, that isn't going to be covered. If somebody fails to not buy or fulfill their end of the bargain on the contract, that isn't going to be covered either. So if you can think that if it could be as a result of some third-party type claim that the insurance company could go back on liability, that's potentially going to be excluded from your crop insurance cited coverage. What perils are you covered for? Pretty much any kind of natural causes of loss, temperature, freezing, mold, disease, anything that's weather related. Also, ask your agent what your specific time periods are, when you need to report your specific information, such as when you've planted your crop. What is your requirements for if I receive damage to my crop? there's a 72-hour notice that you need to notify your agent once you've noticed damage on your crop. That makes it really important for claim settlement, because if you get to the end of the year and then all of a sudden find out, oh, I've got problems with my crop, I don't have the yield there, or there's some other type of problem, and the damage actually occurred to that months ago, you could be in jeopardy of having the claim denied. Claims on WFRP do not get settled until you file your tax forms. So that's another important factor to remember. Also, your coverage doesn't start until the earliest of binding your coverage, either March 15th, or if you're a fiscal tax filer and your tax year doesn't start till July, your coverage doesn't start until that July period. And it's only going to cover the crops that are harvested during that tax year. On the new hemp policy they're coming out, like that policy is very limited on information that we have here. My understanding from what I've gathered from AgriLogic is that the counties are predominantly in Oregon are going to be in the Willamette Valley. We thought Southern Oregon would be picked up, but it doesn't look like it. Klamath County and over in Umatilla County. So counties on the coast are also excluded from it for this initial year. Dates on that, sales closing date, I believe on that policy is also going to be March 15th, since it'll be a spring planted crop, but acreage reporting dates, that still tends to vary, but what I've seen on the latest literature is August 15th would be the acreage reporting date. The contract on that, it is going to require a contract, but the contract would not be due until acreage reporting. Probably is try to get as much information as you can. Try to make a decision by March 15th on that. We have no idea what the rates are going to be. But when we talk about a contract for like WFRP, the price that you're established in that contract is what we're going to use to have as your expected income on that crop. For the multi-peril policy, my understanding is that it will not, there will be an established price for hemp, and it won't use the contract price. There is a couple of private products that are out there. One would be hail coverage. Last year we sold several policies for hail. There was several claims that were paid out. You're only being covered for a named peril. We call these products a named peril. Hail and fire are the only two perils covered by that policy. And that there is no sales closing date on that, but there is an end of insurance. End of insurance could be for like the regular crop insurance policies, could be at the time that you harvest that crop, or there's an actual end of insurance period. So that's going to be another thing that you're going to want to ask your agent about when you look at this policy. Hail, like I said, is the sales closing. You can actually bind coverage up to 24 hours in advance. But typically the products that I sold last year, you had to have an underwriting, there's an underwriting questionnaire, and that has to be supplied. The premium on that is due at the signing of the policy. So the premium's already determined, you pay that premium. For the subsidized policies through the federal crop insurance program, there's a premium billing date that comes, typically it's in August 15th. That will be for whole farm revenue protection. But for the multi-peril, we don't know what that that premium billing date will be. So you don't have to pay the premium up front on those federally subsidized programs. That's a definite advantage. One other policy I want to touch on that's coming out, it's been filed for the state of Oregon, but the rates have not been approved or released yet. This is a policy that's been developed off the historical average mean for counties in Oregon, each county. It's called parametric insurance. It's following the historical average mean for a county on temperature, precipitation, and solar radiation. It uses a model that simulates the plant growth and follows what the average weather pattern would do in that county for that plant. However, it's not covering you for any kind of plant damage or expected plant damage, but the coverage is for a deviation from that average weather mean. So you're basically insuring for a proper growing weather situation. And so that deviation from there, they give a percentage, and once it drops below that certain percentage, you qualify for an indemnity. And depending on how much it deviates will depend on the indemnity on that. That does not require a contract for that policy. And so that may, and also the requirement for, on the multi-peril, my understanding, Ben mentioned it, was there may be the requirement for having at least 1 year of producing hemp to qualify for the production multi-peril policy. So those first year growers, this may be the only option, would be this parametric coverage that would be offered, or hail. So that kind of covers all I have. So any questions? Yes, we've got a mic right there. They'd actually like you to speak into the mic so that we're able to record that.
Yeah, I just wanted to ask when you think the more information about the federal policy will be released.
I don't have a specific date, and it's kind of keeps getting pushed back. Again, and the development was one of the fastest developed policies ever, so I think they're trying to be cautious a little bit and probably rechecking some things, but it could vary anywhere from a day or two to, I'd say, maybe up to a couple weeks. So I'd say within the next week, maybe early next week, there might be a good chance of it coming out.
So it will be available this year, though, in
Yes,
Oregon.
it is, yes.
But only for certain counties, did I understand that correctly?
That's correct. Certain states and certain counties. So for the Northwest, Oregon is the only state, and within Oregon itself, only certain counties.
I see. Thank you.
Any other questions? Okay, got any last minute thoughts?
I guess only last minute thoughts is, again, I mean, this is a new industry. Heard a lot of things yesterday in regards to challenges to this industry, and crop insurance hopefully can help meet some of those challenges, but likely not all of them. And the same risks that you face are the same things we have to try to avoid in crop insurance, the exposure on the buyers or their lack of buyers and processors. The reason being is we have to avoid what's called adverse selection in crop insurance, or really any form of insurance where there's you buy insurance, but you're going on about your day as normally you would. Being as a farmer, you're going to produce the crop as you normally would, applying good farming practices. And we don't want to have crop insurance be something that it's more advantageous for you to lose the crop and make more money off of crop insurance paying for it, as opposed to you growing the crop and marketing and selling the crop itself. So that's why we kind of built in, or there's potentially these certain parameters that are in whole farm and potentially likely to be in the APH policy. I would say, though, into the future, as more data is collected, it becomes more widely available, your multi-peril APH policy is going to be a standard for risk management protection, a standard crop insurance tool for risk management. That's what it's become for a lot of other crops, that our participation levels in APH forms of insurance for like corn and soybeans And I know hemp is something entirely different, but you're looking at upwards of 90% of the acreage, or well above 90% of the acreage is insured with those types of insurance. And then there'll be limitations on what it does cover, but with more data, then there's potentially more enhancements. But you, as an industry, the stakeholders that you are, growers, have the opportunity. I know there was the presentation yesterday with AMS and their regulatory process. This is a little different. There isn't a proposed rule out there or interim final rule that you provide comments on. It's more, I guess, maybe it's a little better in that you can comment to AgriLogic, you can provide data, you can help out, you can make comments to my agency or the agents. But there are means and methods to collaborate. A lot of times it's best to collaborate locally through certain entities or organizations, whatever they might be, financial or grower associations, to kind of combine your efforts and maybe project those things also through the political process as well. So there are options to influence this through the future. And this is, again, subject to change since all these policies we're talking about are pilots. They are a little more flexible. They change from year to year as opposed to being kind of locked down and not changing. I know this is kind of a small audience, different than yesterday where it's kind of packed house, so people feel a little more safety in numbers and there was probably more opportunity for people to ask questions, and with a smaller audience. Some of you may still have some questions, and George and I will still be around for a while after this is done.
Yeah, I have a booth downstairs.
Yeah, and George also has a booth, so yeah, if you don't want to bring up a question now, I'll be around for a little while. I can bring it up individually. Okay. Thank you all.